Hey everyone, Dalton Grados with Grados Capital here. What has been happening in the S&P 500 over the past couple days? We're going to cover that. Certainly a statistically significant move here as we have had a major correction, about 4% down in just a couple days. And so what triggered this sell-off? Essentially, the thing that we have been running from, that the Fed has been running from, admitting all along, which is the fact that the United States is in a state of hyperinflation. This is a topic that's, when it's been brought up to the Fed as far as their monetary policy, they've just kept kicking it down the road. Oh, you know, we're not going to raise rates. Inflation's nothing to be concerned about. Well, it reared its ugly head, and we have reported a record increase in inflation. In fact, if we look at this article here from investing.com, the sell-off was mostly led by tech as the consumer price index rose 0.8% and 4.2% year on year, which is the fastest pace since 2008. Now, we did hear from the Federal Reserve after this, and they said that they will make the case that a lot of these pressures are transitory and will fade later in the year. And of course, they are not backing down from their stances to not raise rates. One section that I thought was pretty interesting here was that investors continue to shun growth stocks like technology, which have higher valuations that are less attractive in an inflationary environment where money today is worth more than money in the future. It also says, looking ahead, some on Wall Street are anticipating further downside if the S&P 500 has a meaningful break below the 4,100 level. Now, we saw today, being Thursday, May 13th, that we did have a little uptick here. So according to the charts, we had a massive fall down here, and then this green dotted line is my 50 EMA. Sort of bounced there, right around the 4070 level. And today we had a little bit of recovery, and we closed at 4112. We can see here, if we looked at the hourly chart, nice recovery and held above that 4100 level. That's the same level that they mentioned in the article, that if we had a meaningful break and close below 4100, that we could see further downside. So today's recovery could signal that we bounce from here. It's kind of hard to tell. Today we actually had about a 1.2% recovery because of jobless claims, which were less than expected, signaling better signs towards recovery. Now, the last thing I want to point out here is a chart of every day of the US stock market for the last 10 years. I want you to understand that the moves we have seen over the past couple days are statistical outliers. Most of the time, the stock market moves between -1% and +1% in a single day. Now you see here this dot, so each one of these dots is a day in the last 10 years. This dot is when prices fell 3%. This dot way over here, 7%. This dot over here, 2018, we rose 5% in a day. But the majority of the time, we move between -1 and +1% in a day. And so I posted on my Instagram today, and make sure you're following Grados Capital on Instagram, that the moves we've seen are very statistically an outlier, and it's typically in these times that I like to let the dust settle and wait for things to calm down before entering positions. Again, you don't have to trade every day if things are uncertain. However, you know, a lot of momentum traders do like to hop on the action and make quick cash, and there's certainly plenty of money to be made there. Just sort of depends on the type of environment that you like to trade in and how much volatility you're okay with. So that's it. That's what's been happening in the markets over the past couple days. Big spike in volatility, about a 4% drop. We recovered 1.2% today. Let me know in the comments, do you think we bounce back from here, or do you think we have more downside ahead? We've heard from the Fed that they're not changing their policies. Could this just be a temporary spook in the markets? Let me know what you think below. Don't forget to like and subscribe to the channel as well, and follow Grados Capital on Instagram, and I'll see you guys next time.